Welcome to Mandates and Megaphones, hosted by Jeremy Maggs, unpacking the politics, promises and power plays behind the G20 summit.
Hello and a warm welcome to another edition of Mandates and Megaphones here on Moneyweb in association with Standard Bank. Now, South Africa prepares for the G20. One of the most defining tests of national competitiveness, I would contend, is whether we can deliver an energy transition that is both just but also investable, one that restores grid stability, mobilizes global capital at scale, and ensures that communities are not left behind in the process. And today I want to explore that critical intersection of climate ambition, energy security, and financial discipline, and ask whether South Africa can move from policy promise to real implementation velocity. And my guest in that respect is Rentjie van Tonder, who is head of power at Standard Bank Corporate and Investment Banking. It's a portfolio, I think, that sits at the heart of infrastructure reform, private sector capital mobilization, and also long-term climate resilience. So, Rentjie, a very warm welcome to you, and maybe let's start with the big picture and maybe a framework. And in your opinion, why do you think just transition matters not only morally, but economically and competitively for South Africa?
Hi, Jeremy, and thanks for having me. I think you start with a very typical question, an important question. I think if you look at where we are in our energy journey, not only in South Africa, but more broadly on the continent, you cannot ignore the impact on communities, the impact on the economy, and the need to be able to have sustainable investment to drive and develop new opportunities, but at the same time ensure that you bring the development of not only the communities or job creation, but also the sectors linking into these type of developments and energy generation as well as transmission into the growth trajectory on the continent.
And Rentjie, all of that leads to a just outcome, but in a context where affordability, climate pressure and grid collapse risks collide, it's very difficult to reach some kind of consensual outcome, isn't it?
Yes, and I think that's what's making it so much more difficult to be able to find that balance and to ensure that you attract reliable investment and have the funders to be able to execute on the promise.
So when you talk about finding a balance then, let's talk a little bit about the role of finance and market discipline. Do you think banks, and this is where you sit, should help shape transition direction, or do you simply fund where the market demands?
I think the financiers do play a very important role, and it's not only through their own policies and mandates and how they see their financing ability being transacted into real projects, but also how they mobilize in each and every country where they play a major role. And I think the balancing fact is the important understanding of what is needed and what is required. You know, we may find that in certain countries it does make sense to develop more gas to power type of opportunities, whilst in others you have abundant renewable energy resources and there's already an enabling environment to be able to fast track that. So it's not only about financiers partnering with developers and sponsors, but also being the responsible supporter of a industry, understanding the bigger need of the just energy transition and also flexibility in the broader scheme of things.
The bigger need is important, but as a financial institution, you've also got to manage and weigh risk very carefully in that respect.
Yes, and that's very important. I think the misnomer sometimes is how do we define bankability and how do we look at risk allocation and how do we effectively, as a financier, have the ability to transact in the right way and executing in a timely manner, because this is ultimately what we want to see is the implementation of projects, not only policy formulation and discussion around how do we fund it and how do we find ways to effectively execute it.
You talk about the bigger need, but it's also tricky, I imagine, Rensha, to avoid financing energy solutions that are just solving short-term supply gaps, but maybe entrench long-term carbon and cost risks. It's a question of balancing priorities, but also looking at the needs of communities and people as they exist right now. Again, not always difficult to find that balance.
Yes, and I think that's why we talk about long-term sustainable solutions. And I do believe that what we currently see on the continent, there's more and more focus on having that balanced approach to risk, but at the same time acknowledging that it's not only about short-term plugging the gap, but also looking at how do we use the natural resources in a specific country and find the best ways to be able to get suitable projects and executable projects. I mean, if you just look at the broader investor base in Africa and how many interested parties and potential investors are ready to actually execute and develop projects in Africa for the broader sustainable drive towards energy security. But at the same time, you need to keep track of the enabling environment. Private sector and investors will not come into a country and invest in projects and fund projects if there's not sustainable policies, there's not an open environment to be able to, for example, fast-track these projects. And in many cases, generation is limited by the off-takers, the ability of the off-takers to be able to pay for the power. And you also look at the environment you operate in, low-growth environments, non-sustainable development, uncertainty around energy policy, a lack of focus on transmission development. And then you also have currency depreciation, where most of the projects are being funded and developed in hard currency, and there's a lack of really deep local currency development and execution and funding. So that's also something where financiers can be a bit more innovative and find ways to support some of these sustainable investments.
So against that wide backdrop then, do you think that South Africa is pricing transition risk attractively enough to compete for that global capital that you've just referenced? Or is there a sense that investors are maybe still a little hesitant?
Look, if we focus only on South Africa, we've had an excellent track record in formulating a roadmap for renewable energy, and that started with the launch of the Renewable Energy IPP program back in 2010, and then since then we've seen significant growth in the sector, with currently around about 10 gigawatts reaching financial close and being procured. And I think to that extent, close to 300 billion rand has been funded and invested to date, of which around about 53 billion rand are foreign investments. So it gives you a very clear sense of the appetite for investors, including foreign investors, as well as funders, because the bulk of that has been funded through local funders, mainly commercial banks and local development finance institutions. And to that extent, we've seen an increase in competition, a decrease in the debt pricing, whilst most of us as commercial lenders started to take more and more risk. You've seen more leverage coming through in the projects, longer tenors. So I do think to that extent you can definitely argue that South Africa has successfully mobilized funding and investment in its drive towards energy transition, and specifically renewable energy.
And it is a lot of money that you talk about, and the trajectory does look impressive. But maybe could you quantify the bigger scale and the timing of capital required? I mean, that's a lot of money, but perhaps not enough. And maybe what would failure to mobilize actually mean?
Look, I think if you look at the recently launched and gazetted IRP, there's reference made to over 2 trillion rand of investment required to execute or to proceed with the IRP, implementation of the IRP. Now, again, that is a a grand plan. It's an important roadmap for the country, and to be able to show commitment in terms of how do we plan in terms of future generation. I think the number is large. I think at the moment what we're seeing is just in terms of the projects that we're looking at, not only in South Africa but outside South Africa as well, it is significant. We currently need to crowd in the likes of institutional investors, institutional funders, which include pension funds. What we have to do is to be absolutely open-minded around the investment requirement and how do we make sure that the enabling environment is conducive to attract international investors and funders. And I think if you look at the recently launched ITP process to crowd in private players in the transmission project approach and requirements around that, very important. How do we successfully launch a program that attract these type of investors? Because just the 14,000 kilometers of transmission network that we need to execute is significant, and the funding, local funders just won't be able to just fund all of that.
Do you think that enabling environment that you talk about is flexible and conducive enough to the type of investment that we need?
I think if you look at just generation and what we've achieved to date in terms of mobilizing funding as well as investment in that subsector, and now I'm not only talking about the government programs under REAP, RMIPP and the BESS program, which has been oversubscribed, you also need to look at distributed energy and the way the government has come through in supporting, the enabling in policies, the lifting of generation licenses, opening up options to wheel, the recently announced trading licenses that have been awarded. I think all of that are definitely positive sentiment. And if you look at the number of projects that's currently being developed and funded to sell into the traders, to be able to directly wheel power through the grid and then sell onto some of the corporates, that is definitely seen as a positive sentiment. And to that extent, I think we do believe that opening up of the market will create more flexibility and faster execution of new generation into the sector. But at the same time, we need to fast track the execution on the transmission side. And I believe that is still underway. The RFQ was issued, first bids were submitted. We're still waiting for more clarity around the credit guarantee vehicle that government is proposing. And I think that's the type of bankability questions that any investor and funder will have. So critical to keep momentum on that.
Rensha van Tonder, impressive that a lot of projects are in the pipeline, but any investors are always going to ask whether green projects are actually delivering a competitive return, or is concessional finance still essential in order to make this work?
That's a good question, and we always get the question whether concessional finance is required to be able to really make these projects work. I think absolutely not. What we've seen was in South Africa specifically, during the early rounds of REAP, round 1 and 2, we had international DFIs funding some of the more complex CSP type projects. But since then, no real international funders participated, and that's really because of the competitive nature in the country at the moment, with all the commercial banks funding. I do believe that returns did come down, but what we do see is that a lot of investors are actually creating broader platforms, trying to get to economies of scale, at the same time crowding in local investors, local pension funds. So it is definitely a compelling case. There's also a shift, or I won't say a shift, but more focus on the private market and more flexible solutions, including battery energy storage that we see currently coming through. So we have a number of examples where these type of developments are actually becoming more of an interested investment opportunity for investors. And that's why we're excited that you still get your required returns and you have the ability to deliver what the clients need at the end of the day.
But Rensha, you will agree with me, there is also a lot of hype at the moment. And I'm interested to talk a little bit about integrity and accountability. What kind of governance tests are you prescribing to decide whether a project is genuinely transition aligned versus just, how can I put it, green themed marketing?
Yeah, I think what is definitely important for us is to be able to test the project in terms of the basic principles around the technology, the process followed, whether there's a budget quote being issued, whether there's a transparent process in bid award, whether that is a private process or a government process. And I think with most of the renewable energy project, it's quite easy to justify and link it back to sustainability. In most of these projects, there's a direct link to the communities and the impact on the communities and social spend. And I think that's very important when you evaluate the type of project that you are considering, and also how the clients are actually looking at procuring from IPPs in terms of green electrons.
Let me push you a little bit on communities if I can. Social outcome and workforce transition, I think, is critical in this debate. Are there specific quantitative social performance metrics that you insist on before deploying capital?
Yeah, I think it's not necessarily a specific criteria. I think what we do is evaluate that as part of our broader assessment. And I think if you look at what we've been doing, for example, in Mpumalanga, a very clear example of how Standard Bank has played a leading role in partnering with one of its biggest clients, Seriti Resources, a coal company. And they acquired a company called WindLab a few years ago, which was facilitated through Standard Bank as an opportunity that we brought to Seriti and said, these are projects being developed in your region. It actually makes sense for you to partner. There's specific programs that you could facilitate through community development and community involvement. And that's exactly what we've done. So Standard Bank, together with Seriti Resources, created Seriti Green. And to date, we've closed our third 150 megawatt project, with the first one aiming to reach COD towards April next year. And if you look at the impact on the communities, the training of local communities to be actually employed on these projects, reskilled, the type of development directly linked to the construction side, the O&M side. And I think that's where we test some of these opportunities, and how do we as a bank actually keep ourselves committed to community development and the broader impact with our partners.
That's one good example, of course, but there is the argument that a lot of the reskilling programs in other projects are not necessarily investable yet, or even they're still at the conceptual stage.
Yeah, and I think it's a fair comment, because in many regions this is not necessarily taking off yet. I mean, we had the benefit that in Mpumalanga there is a project, or now 3 projects, that we can actually test this as real impact. How do we live what we say? I think some of the challenges in other regions are a bit more tricky, and I think we need to challenge the developers, our clients, and the contractors to keep them honest in terms of what do we need to do to ensure that we meet those metrics and actually report on that, because the just transition is real. And I think it's not only the responsibility of 1 or 2 players or the sponsors, it's a much broader role that everyone needs to play.
Rensha, I'm also interested to ask you about the balance that you've got to manage when it comes to transition pathways and fossil exposure. How difficult is it to evaluate the pace at which to exit fossil exposed sectors, which is critical to the just transition, without destabilizing current industrial capacity?
Yeah, Jeremy, I think the bank we are very open and honest around our policies. And if you look at the approach we've taken, there has been a commitment not to fund new greenfields, fossil fuel power generation, for example, coal power generation. I think that is a responsible move in the context of acknowledging what Africa needs. So gas to power is still a very important driver in many cases in terms of balancing renewables and being a mid-merit supply opportunity. And in some countries, you can still argue that coal power, it's very relevant in many countries where you have abundant coal resources. I think the other argument is if you can do new coal power or expansions where it's actually lower emission standards and you reduce the CO2 emissions, there may be an argument. I mean, we may look at refurbishment of existing coal power stations if that makes sense in terms of a specific country and the need to be able to support economic development. But the balance is important. And if you look at what we've done as a bank historically and still continue to do, renewable energy far outpace anything else we do in the power sector. And I think linked to that is more and more a focus towards sustainable investment practices, looking at battery energy storage, because there's always the baseload argument around what do we need, at what pace we need it, and why do we believe that a country needs new investment in generation just holistically.
So let me circle this conversation back now to the G20 if we can as we end our discussion. Are there specific policy signals beyond generation reform that are still missing that will unlock deployment at speed, which need to be discussed more assertively?
Yeah, I think it's a difficult one. As I said, there's great momentum. There's definitely positive signals around policy reform, especially around generation. And there I want to highlight the introduction of traders, the anticipation of the wholesale market that is expected to be launched next year. I think the momentum is there, but the implementation currently is still under progress. And I think a more firm commitment around timelines of implementation, how SAWEM will work, how contracting for difference will work, how existing contracts will be implemented, and how the independent system management operator will introduce some of these mechanisms into the market. And that is all underway through subgroups. So I think there's a positive sentiment. The other area where policy commitment and implementation in terms of timelines is certainly on the transmission and the introduction of ITPs. And I've mentioned the RFQ that was issued, first responses, but I think important is how the credit guarantee vehicle will actually be formulated, set up, and how government will be able to commit under that, because I think it's very important signals to investors and to funders that we are serious. We need to implement and fast track the rollout of 14,000 kilometers of transmission network as soon as possible, and firm commitment around the policy framework to do that is critical.
And just finally then, is there a broad, credible message that the entire banking sector can deliver on climate finance readiness?
I think the broad message is that we're certainly ready, we're committed. We see the impact of growth through the power sector, and that is not only generation but transmission, and how you can change lives. And I do believe if you look at the value and the investment to date and how the finance sector has stepped up, that the commitment is there. And I think we want to do more. And we want to be able to effectively report on the impact in terms of the just transition, including job creation and economic upliftment.
Rentje van Tonder, Head of Power at Standard Bank Corporate and Investment Banking, thank you for joining me on this edition of Mandates and Megaphones here on Moneyweb.
Thank you for listening to Mandates and Megaphones. You can find more episodes on moneyweb.co.za.